Now versus a family renting that same family for 10 years, man, in 30 years, you would have that mortgage payoff. You can retire. You no longer have to make mortgage payments, right? As opposed to if you don't buy that property and you're renting, you can never pay off rent. Hello, everyone. Welcome to a market update with Buying South Florida. So today I brought on Randy. He's a friend of mine. He's also an investor in real estate, in crypto, and in the stock market. So I thought it'd be a good idea to bring him on and kind of exchange some ideas about what his thoughts are on the real estate market, on crypto, maybe even stocks. And I wanted to get a, more of a from a buyer's perspective, Randy, what your opinion is going forward with the real estate market. One of the things that you had brought up that we have a difference in opinion on is that the real estate market is going to crash, right? Or the housing prices are going to crash soon and so forth. So just kind of wanted to hear your opinion and your reasoning for that. So go ahead.
All right. So first and foremost, I want to say that I've been a real estate investor for over a decade now. I've owned several properties, and as of recently, I was renting. I rented for the better part of the last 3 to 4 years, and the reason for that was because pricing was becoming astronomical. And this was before the pandemic. It had prices were going up as they normally do on a cyclical basis. So what I started to see was that the inventory was not what people thought it would be based on foreclosures and expected different turns of events, things that were supposed to happen that probably didn't, or that have been delayed. Which that's kind of my reasoning behind my thinking. I've recently come around. I recently purchased a home myself after discussing the differences between somebody who rents and somebody who buys. People's objectives are different. And I just said, what, the Miami market over the last year, and given everything that's happening, I said, there's something unique about this market in particular. So I'm only going to speak on the Miami market and what I think is going to happen here. This is not what I think about, the broad market across the US. So
I agree.
To summarize it really quick, what I think is happening in Miami is that in Miami, we have a unique market in that this market has been relatively cheap for the last decade or so compared to other big market cities like, LA, New York, Chicago, Texas. We're relatively cheap, and this is becoming more and more a place where people want to move to. They love the weather. They love all the big tech companies are moving here. There's a lot of promising things in the near future for Miami, and a lot of booming construction here. A lot of foreign money is invested in this city. So what I think is going to happen is that we're going to catch up to the rest of the markets, and we're kind of going to level off. I wouldn't say that there's going to be a crash here, but I do think that generally speaking, the prices do have to, kind of, either level off or start to come down a bit in other markets, not here. Yeah. Because people are going to continue to move here. The more and more, commerce comes here and big changes come to the city. So
yeah, and I agree with that point. My take on that is that South Florida has access to the Americas, or one of the access points to the Americas. There's a lot of people from Central and South America that want to visit or move here, right? Many of them have a second home or an investment property here in South Florida. So that's a reason that South Florida is always going to maintain in high demand, right? We have access to the Americas. There's a lot of other states up north, New York, Wisconsin, et cetera. There's a lot of retirees that come to Florida, right? And particularly South Florida. So I completely agree with you in your point that South Florida, or like you said, Miami, the demand is a little bit different. It's a little bit different market than if you were to go up to like Jacksonville, for example, right? It's a little bit different than if you were somewhere in Georgia or Virginia. Yeah, those states are great for businesses and so forth, but still, South Florida in particular not only has access to Central and South America, but also is good for business, is good for retirement, etc. So That's one of the points that you and I kind of disagreed on before, because you were more on the renting side of things, and I kind of always gave you pushback on why are you renting when you could be owning, right? The benefits of ownership, you have, you're building wealth over time, you're building equity, you own the home, so you don't, run the risk of the landlord increasing your rent every year, the landlord coming in and, essentially kicking you out for, for them to move in or for them to sell the property and so forth. So I always maintained a strong opinion about home ownership, right? So I'm glad that you came around. I saw that you purchased a home. I think it's the right move, particularly with interest rates being so low, right? In this market, you can get, conventional in the 2.7, 2.8 rates with semi good credit, right? And, going forward, kind of like, looking forward maybe 3 or 4 years, I do agree that the prices on real estate will begin to level off somewhat, but buying the property now, you're essentially locking in a historic low interest rate. And over that period of time that people wait to buy a property that they are renting, that's money they're never going to get back on rent. So I'm glad I completely think it's the right move there. So in terms of time frame, where or when do you think you'll start seeing the market prices level off in South Florida?
Uh, it's hard to say. It's hard to say because the country is just as of recently completely opening up. There's still some places that are that are not completely fully open. Whether it be for vaccination or different things. So it's hard to tell, but I do think that just based on the fact that people continue to move here and they will continue to move here, because it's not only about the unconstitutional like lockdowns that that they call for like people from California or like New York, a lot of businesses that were shut down. There's a lot of people that got hurt by that situation. So they're looking for places with favorable tax benefits, no state tax like there is here in Florida and in Texas. So Texas and Florida are unique in that alone. They're areas they have good weather, cheap taxes relatively compared to the other places. There's no state tax, and there's a lot of benefits for corporations to relocate to these places. There's a lot of programs that are being pushed by the governors of these states to make people come down and move into these places and start their business and do different things. So I can't say for certain when it'll happen, but like everything that goes up has to come down at some point. So it's a perfect storm of like a high demand, low inventory, people relocating, everything that I kind of just explained, all kind of happening at once, and that's what's driving these prices and doing what it's doing. But you can see, I've personally seen, since I've been in the market for 9 months looking for a property, and over the last 9 months, I've lost several deals to people with, over asking price, 50, 60, 100,000 over asking, cash buyers. I do see that has slowed down quite a bit. And I've talked to a lot of realtors and they agree with that consensus. It's not as crazy as it was, say, 3 months ago, and it's not even nearly as crazy as it was 6 months ago. So it has been slowing down. The prices are still going to continue to go up because people will continue to move. There's still a lot of building going on. There's still a demand for real estate. So that's just one key indicator of I would say positive in this market.
Yeah, and what I think is the home prices are going to begin leveling off the moment we start seeing the interest rates on mortgages go up, right? So Federal Reserve already said they're going to maintain or keep the rates low, or they're not going to increase the rates at least until 2023. Now, I do think that there will be a slight rate increase before 2023. So the moment you start seeing interest rates go up on mortgages, that's when I believe the market price or the prices on these homes will begin to come down a little bit. It has to, just because, if you're getting a 2.75 mortgage now versus a 3% mortgage, the difference in payment is going to cause a lot of these buyers to not qualify for a certain price range. You just have to bring your prices down on the home to be able to give access to more home buyers. So the moment you start seeing or we start seeing interest rates on the mortgage side go up, I think that's when we'll see a little bit of a price correction on these mortgages. And also we're seeing the prices of lumber come down, and the prices of building materials and so forth, they're beginning to come down as well. So I think there's going to be a more affordable construction costs. I think that once these the forbearance programs end, we're going to see more people list their homes for sale. So there's going to be more inventory in the market. More inventory means the prices of the homes have to come down a little bit as well. Now, I definitely don't think there's going to be, 15, 20% market correction, let alone a crash within the next month, unless obviously some, black swan event happens or something like that causes the real estate market to crash. But that's when I really think that's when we'll start seeing a little bit of a market correction in terms of prices. And just like you said, to kind of reaffirm your point there in cash buyers, we're not seeing those $50,000-$60,000 above listing price with no appraisal contingency, no inspection. I think that's slowed down a little bit. I think that's good for the market that it has slowed down a little bit. So just to kind of wrap up my point there, the moment you start seeing mortgage rates go up, the moment you start seeing more inventory in the market, I think that's when you start seeing a little bit more of a market correction. Maybe I'm thinking maybe about a 2-year time window when we'll see, kind of like the peak market correction. But within, the near future, I just don't see any market or any relevant market corrections going forward. So, and to your point about, Florida bringing in businesses and so forth, I agree. I think demand is going to remain high in Florida and in South Florida. I think the market down here is significantly more attractive than a market up in New York, for example, right? So if you're a home buyer and you're looking to buy something here versus New York, you buy it here 10 out of 10 times. Plus it's better weather anyways, right?
100%.
And one of the points that we kind of had a difference in opinion on as well was you had sent us an article about millennials, right? Regretting owning a property. And one of the things that I kind of gave you pushback on was that buyers regret the properties that they buy when they buy the wrong property, right? And if you buy a property that you can't afford, if you buy a property that in the wrong neighborhood, maybe you settled for something that's too far away from your job. I definitely think that those types of buyers are going to regret buying the home, but it comes back to, having patience and looking for the right property to buy. Like you said, you were in the market for 9 months and then you found the right property for you. Right. So
it wasn't by choice though. The 9 months, was mostly because of, what I explained with losing offers to cash buyers and over asking. I could have done the same thing. I could have matched, but I'm also not going to do that because for me, prices are expensive still. But for somebody from California or from New York that's paying $1 million for 800 square feet, for them, a house that's listed at 550 and they offer 100,000 over asking price for a 3,000 square foot property, that's nothing to them. They'll pay that all day because they're what they get. It's all relative. So, but yes, you do have to be patient, and you do. But to answer that, to go back at that point. So those buyers, those millennials that were referenced in the article, it's not really any specific millennial or group of them. It's just like a general, how do I say this? Like a classification of them today, like the way that they think, their mentality. They're more mobile. They're less they're less tied to things. They're not so emotionally invested into stuff. They're like nomads. Lo mismo. They'll live here today. They'll move tomorrow. They'll live here. They'll go there. They change jobs. They change. They travel. They're just doing so many things that nothing really ties them down like the old conventional way. Which that's the kind of mindset that somebody who invests in a long-term investment like a house is like. Their mentality is that where this is where we're going to settle. This is where we're going to plant our roots. We're going to have a family. We're going to maybe start a business or get a job in this market and stay there for the rest of their lives. That's the majority of people are like that. But the millennials, they're different. They're not tied to anything. One day they think this way and the next day they think the other. And, that article specifically talked about just the differences of, and I agree with you, it was a poor example of a property that did have a lot of issues. And, not every property has a lot of maintenance expenses. Not every property has a lot of repairs that need to be done. It really depends on who's living in it, how they take care of it. But yeah, it's just, the renting versus buying, we can get into that and we can talk for hours on the differences.
Yeah, and I think it has to do a lot with buying the right property. So it's important that you understand the goals that you have, not only as a buyer but for your family. Or do you want to just settle down in one property, or do you want to be a nomad, right? So I think it really comes down to buying the right property for you, for your goals, right? Maybe your goals are just settle down, plant your roots, and that's it. And the type of home that you buy will be different from, like you said, the nomad, right? So, and the reason why I gave you pushback on that, I said it depends on what the goals are. I think at the time I told you not everyone should be renting because, one of the points you made was that home ownership, the cost of maintenance and all that were higher than renting. And I said, well, maybe you're buying the wrong property.
Okay. Yes, I
right?
remember now.
So
asset versus liability.
Yeah.
So we'll discuss that.
Tell me your take on that. Your renting versus buying, and why sometimes renting is better than buying.
So, and again, I do agree that it depends on your objective and all that. But, generally speaking, for an investor, somebody who wants to accumulate wealth, not get eaten alive by taxes along the way, acquires property every so often and rents those properties, and then uses the rental income to pay off the mortgage of that property being paid by a tenant or tenants over a certain period of time, and then either takes out lines of credit against those properties and acquires additional property, or accumulates cash flow and buys property on a yearly basis, or however often they do it. But the end goal being to accumulate a portfolio of properties which all generate rental income enough where they pay themselves off and they provide you with positive cash flow. And then you don't pay capital gains tax on any of those properties because you're not selling them. You're going to hold them long term. And then after they pay themselves off, you now have 10 properties that are yielding you, let's say each one yields you $2,000 a month in rental income. The mortgages are paid off. All you have to do is pay the property taxes on them, the insurance if it's required, and then any maintenance. And that income can be used to then pay for your property where you live. But if you just buy one property and you're living in it and it's not putting money in your pocket, but rather taking it out, and you have to cover all the expenses that come with homeownership, like landscaping, repairs, all kinds of different things, upgrades. A lot of people get excited. Look at me. This is a perfect example. I just bought this house. I can do everything I want to do to it right now. I can. If it wasn't for the people around me telling me, hey, take it easy. You just offloaded $100,000 in the down payment. Like, take it easy. Yeah, I want to do the garage. I want to do the epoxy floor. I want to change rip out. I don't have to do anything. The house is brand new. It doesn't need anything. But in my mind, I get excited and I want to, and that's what happens to a lot of people. So you find yourself over improving sometimes. and the money is not always seen in every type of property. For example, a community where there's an HOA, like like a Lennar community, or those properties, they all look the same, right? You have to follow a certain code for the paint outside, the driveways have to be the same, everything kind of has to be the same. So in those communities, you're kind of limited to what you can do and how much appreciation your property will have based on what you put into it, as opposed to a neighborhood like PSN, for example, or Royal Oaks, where while PSN doesn't have an association, Royal Oaks has a limited association, but you can improve your property and you can be in a $500,000 house and be right next to a $1.5 million house. The appreciation level is different when you're inside of a community that has limitations compared to one where and a lot of times people don't think about that and they just go crazy. They start putting all this money in. So then in the end, you're losing that money. That money it's not going to show in your property value.
Yeah. So going back to the beginning of your point there. So when you are investing, the goal being cash flow, then yeah, right. If you build up a portfolio of 10 properties and you're creating a, $2,000 per property cash flow at the end of, once you pay off the mortgages and all that, great. I agree with that. What I don't agree with is that when you said, it's the person that just buys the one property and stays there, it's not better to rent, right? Or did I misunderstand your point about, that person that's not creating a portfolio of 10 properties and they just buy that one property where they live at? 10 out of 10 times, man, it's better to own the property you live in than to rent it, as just having that one property.
Okay, well, it depends. Let's use the example of the amortization table. I don't know that there's a general table because it's by mortgage. Each mortgage is different, but the majority of them, the first 5 years or 10 years of a 30-year fixed mortgage loan, it's mostly all interest. Yeah. So at that point, you're paying the same as if you were renting. That money's not going anywhere unless you're applying additional funds to principal, which most people can't afford to do or just don't do because they don't know. But if you were to look at that amortization table and you look at how much you actually pay on that mortgage over time, you're paying almost 200. Sometimes, like in my case specifically for my loan, if I pay off my loan in 30 years on the scheduled payments, I would have made an additional $170,000 worth of payments over that 30-year period. Yeah. If I just stayed in that one property.
Yeah, the rule of thumb is that it's almost double of what you buy the property for. If you look at the amortization table over 30 years, let's say you buy a property at 350,000 and you're paying 2.75%, let's say, over the life of the 30 years, you're going to pay almost double, right? So to your point where, the first 10 years you're paying mostly interest, what you're not accounting for is that those first 10 years, you're also creating equity in your property. You're paying down the balance of your property. Even if there's a market downturn and there's an adjustment down, there's also going to be an adjustment up in prices. So even to your point of paying mostly interest for the first 10 years, paying rent is just significantly more expensive, right? If you were to pay $2,000 in rent on a monthly basis, or you buy a property for 350,000, FHA, minimum down payment, 2.7, 2.6 rate, taxes, insurance, all of that payment is going to be about 2,000, 2,100. So if you're paying about the same over a 10-year period, man, that's a lot of money you pay down in rent that you're never going to get back. At least if you buy the property, you're getting some of that equity back. Even though most of it is interest, you're able to get most of that back in the sense of in equity. If you were to sell the property 10 years down the line, the chances of you getting some of that equity back are significantly higher then the chances of you getting any rental payment down, which is zero, you're not getting any of it back. If
You get
even
it
if
off.
you
You could get it off your taxes if you.
even if you're able to get, you know, to normal maintenance schedule on your property, I don't know, you know, the AC breaks, you get appliances, et cetera, over 10 years, it's still significantly better to own your property. You're not at the risk of your rental payments going up. You're not at risk of the landlord asking you to move. And then you're also postponing your retirement, or potentially postponing your retirement an extra 10 years. So if you have a family, for example, that just buys that one property, and I think this was my point during our when we were texting, if you have a family that buys single family residence, that's the only property they buy, and you know, versus a family buying it, not versus a family renting that same family for 10 years, man, in 30 years you would have that mortgage pay off. You can retire. You no longer have to make mortgage payments, right? As opposed to if you don't buy that property and you're renting, you can never pay off rent, which was one of the biggest pushback I gave you, was that if you're renting, you're just never going to pay off your rent. But if you're buying it, you're going to pay off your mortgage. Sure, you'll continue to pay your taxes and insurance afterwards, but that's still going to be less than whatever your rental payment is for the comparable property.
Yeah, but it's okay. So let's go into it's easier to go into like a specific example. So let's say we're talking about a property that has, you know, $8,000 per year in property
Let's
tax.
say, so let's use a $350,000 mark, right? Because that's like your average first time home buyer, single family residence, you know, let's use 350. And let's say it's an FHA loan, right? They gave 3.5% down, right? The rates, let's say 2.75, and property taxes, I don't know, 4,800 for the year, property insurance 2,400, 2,500 for the year. That's more or less the averages that I see on first time home buyers on a single family residence. So let's use that. So 350 purchase price, your mortgage payment is 2,000, let's say. You're
Okay.
gonna
So that person will pay, or let's say they pay off their mortgage, and the taxes on that are, I don't know, on average, let's use Hialeah, for example. Hialeah Gardens. It's a good example, but
property
it's
taxes
horrible.
4,800, let's say.
Because for example, in Hialeah Gardens, there's 3 communities: Bonterra, Aragon, and Aquabella. All 3 of those communities are paying Royal Oaks taxes for Hialeah. They're paying about 7,200 or 7,300, and they can go up.
It's
every
about
year.
2% of the purchase price.
Right. So those property taxes over, let's say after 30 years of paying that, they're going to be paying about, you know, what's 7,000 divided by, you know, 12 months. You're looking at $900 a month in taxes alone. That's a lot of money. Even if you've worked 30 years of your life, you've paid off this property, and you still got to keep paying the taxes. And the day you stop paying those taxes, they can take away your property that you worked 30 years.
If you're looking 30 years down the line, I mean, you have to also account for just inflation. The money 30 years from now, right? The money today will be, it's just different value, right? It's worth less tomorrow than it is today. 30 years from now, that money or that $7,000 that you're referring to in taxes is significantly less in 30 years than it is now, right? So in today's money, if you buy in a new construction community, the rule of thumb for calculating your property taxes is 2% of the purchase price. So those communities sell on average about $400,000, maybe even $500,000, depending on the type of property you buy, right? So if you buy a property in one of those communities for 400,000, your tax bill is $8,000. That's it. I mean, it's pretty straightforward. And my point is that maybe not those, you know, brand new properties, maybe not those, you know, in the communities, new construction, et cetera. But if you buy outside of that community, you're locked in at a much lower interest rate, much lower tax rate, right? Let's say you bought a 350,000, your tax rate is just less. And then you also have the homestead exemption program, right? The laws down here in Florida, as long as you have, or as you file for homestead exemption on your primary property, your primary residence, your property taxes could not increase more than 3% annually. So, if you look 30 years down the line, every year, the maximum tax hike that you have on your property taxes is 3%. So it's not like the property taxes are going to just skyrocket, triple, from one year to the next. That won't happen, as long as obviously, on your primary residence, which you could only have one, etc. But point being, if you buy a property now, you're locking in today's costs, today's interest rate, and if you look down 30 years on inflation alone, it just makes significantly more sense than to just pay rent for the next 30 years or 10 years even, right? And then buy, for example, right? So that's my point. The point is that the longer you wait, the longer you postpone or potentially postpone your retirement, you're paying in money in rent that you're not going to get back in equity. Sure, you'll get to some tax discounts. You'll get tax discounts on your primary residence also, right? So it's the same thing. So it just doesn't make sense to me that someone that could buy a property, the right property, right, something that they can afford in the right neighborhood, etc., someone that could buy a property rents. I mean, it just doesn't make
Yeah,
sense.
but that's the thing. Everybody can't afford to put 5%, 10% down on a $350,000 property. And that's the reason why the rental option exists. It's not, and because of the people who capitalize on the market and actually own those properties that are being rented, or the leasing communities themselves. But there's a lot of assuming it's the right property, assuming the person has the qualifications, which everybody doesn't have. So, generally speaking, just to circle back and bring it all full circle, the perfect example, in my opinion, of owning real estate, and the best way to do it is the way that I explained, where you accumulate property over time, and you subsidize your costs by having those properties pay themselves off by renting them. And then over time, you can cover your living expense, whether you want to rent or own, and you don't pay tax on those properties, because you pay the taxes annually, but they pay for themselves with the rental income. So you're just paying it with somebody else's, you're leveraging your credit.
No, and I agree with that, but that's a different strategy than your first time home buyer just buying a 350,000. So, most people the biggest purchase they'll make is their first home, right? A lot of people just buy one property, they stay there for, the majority of their life, and then they sell off, they retire, maybe they downgrade a little bit, maybe move to a condo on the beach or something like that. But, if you were to buy a $350,000 home, your minimum down payment is about 12 grand. If you were to rent the same property, the rent on a property like that will probably be 2,500 in today's market.
Yeah,
you're going to ask you for first, last, and security deposit.
Yeah,
right. That's $7,500 out of pocket that you have to give just to rent. That's almost your entire down payment, right? So if you're in the market for a rental for $2,500 a month, chances are you may be able to save your down payment fairly quickly. So why not just buy? Right? Which was my point. I mean, and again, if you can afford 2,400 or 2,000 or 2,200, don't go and try to buy a $500,000 property where your payment is going to be almost $3,000. Right? Don't do that. I agree with you. That doesn't make sense. If the goal is to buy a property, the right property in the good neighborhood, good schools, etc., and stay there for long periods, then it's just better to buy it than renting. That's my point. Now, if I do agree with you 100%, an investment strategy where you're buying multiple properties, creating cash flow, that's the way to go. I completely agree with it. Now, I also have to say that I wouldn't just buy any real estate or any investment property. You also have to now look a little bit closer, to properties that you can Airbnb, seasonal rentals, right? Properties near the coast. What makes more sense? So there's a little bit more to that as
Yeah,
well.
they're not all, it's not cut and dry. It's not
Exactly.
one size fits all. You have to look at, you got to look at your markets. You have
Yeah.
to look at, you know, the use, the specific use of the property. Some properties are going to be for vacation rental only, and you can make more money renting as a vacation rental than as a conventional, you know, 12-month lease on a property. Just
Yeah.
because, you know, the demand is so high, people want to work remote and they want to travel, and, you know, maybe they want to work from a beach house for a week, and that's going to cost them, you know, $500 a night as opposed to 200 a night for the whole month. So, you know, it just really depends. But
Yeah.
yes, I agree with your point. I just have my, my opinion and my reservations on, you know, just singular home ownership for the reasons that I explained. It
Yeah.
doesn't mean that it's right or that it, you
No,
know, that you're,
look, Randy, man, if you're a family or if you're a, a person that just cannot afford to create a real estate portfolio, then, owning that one property, I still believe it is significantly more beneficial to that person than it is to rent. I mean, that's my opinion, right? I mean, you have your stance, I have mine in that particular case. If you can build a portfolio of properties, then 100% do it. Build the right portfolio. You know, invest in multiple things, mutual funds, stock markets, crypto, et cetera, and real estate, right?
but it's not, remember, it's not only about, it's not only the down payment. You have closing costs, you have appraisal fees, you have
Yeah,
inspections. There's a lot of things, and if you
maintenance, you
find
have
something,
insurance.
there's a lot of little costs. So if we had a whiteboard, this would be even better. You know, so the next time around we'll do that. We'll set it up. I
Yeah,
have one, but I wanted to have the camera like in the right spot
I
and
have
everything.
one too.
So
I have it back here.
yeah, so the whiteboard will be key. And you know, and you know, sometimes you just gotta itemize things so you can
Sure.
see like the, you know, the actual but yeah, so you know, just to wrap up, you know, the real estate conversation, do I think it's a good time to buy in Miami? Absolutely. I think that if you lock in, like you said, your interest rate and your prices now, you'll be happy a year from now. There won't be a crash, not here. Maybe in other places, but not in Miami.
So
It's just there's too much money being pumped into this city.
I
It's not funny.
I agree. It comes down to a supply and demand thing. So, Randy, man, I appreciate your time. Before we get out of here, tell us about the new business you opened up.
And so we opened up a new spa in Miami Lakes. We do everything from facials, body contouring. Um, we're doing Botox. We're doing IV hydration.
What's it
We're
called?
doing, it's called Skin Med Spa. We're
Nice.
located right behind Main Street,
Okay.
right behind the new the ale house and the new Chella's restaurant. We're open, you know, Tuesday through Saturday, and we have all kind of services. You can check out our website or follow us on Instagram at skin med spa, and our website is skinmedspa.com.
Cool. I'll put your contact info in on the bottom of the description so people can reach out to you, man. Randy, I appreciate your time. We have to do this soon, again soon. I always, value your opinion. Thank you, man. Till next time.
Thank you.
Later,
Take
man.
care.